What's going on, everyone? I hope you're well and doing great as we get ready to do what we do best, put the work in and make sure we stay on the right side across markets. Today, we'll be talking obviously about our continued conversation about Bitcoin, the macro, taking a look at cycle top target. Actually, it was mentioned yesterday and I didn't get to it in the Q&A. So as we get to the Q&A today, I'll make sure we cover what would any kind of year-end Bitcoin target look like. And then, of course, we'll be taking a look at some other things, and questions will come up during today's session as well. But we're going to talk about the timing of the cycle peak and why that matters more than the exact price. Looking here at the corn, it looks beautiful. Bitcoin is beautiful, but obviously Bitcoin here trading at $121,534,000. Breakout, retest, and the resumption underway right now. It is looking good over here from this perspective. We saw it today, or I've seen today now, that Dr. Adam Back, obviously most of you are very familiar with Dr. Adam Back. Satoshi had sourced him in the white paper. That's pretty, can you imagine being sourced by Satoshi in the white paper? Adam is now coming to the conclusion that the most probable thing that we're going to witness is that the cycle peak is going to be a lot closer to the 2028 halving than the 2024. And he also makes the argument, as we have so much in the past. Let me go ahead and find the right slide over here and find out where. There we go. He made, this is a cycle. We're talking about cycles, Bitcoin from one halving to the next halving. And he made the point, you can see like cycle high here, cycle high here. A lot of people point to the cycle high either being April or November 2021. I mean, the cycle high, the highest price point out of those two was obviously November 2021. But Dr. Adam Back, he points to the fact that no, in the last halving, Bitcoin made its high over here. And now, granted, the difference here, though, that there was a bear market. There was not only, it was a 12-month bear market, which is the norm for bear markets in Bitcoin. And not only that, it had a 76% drawdown. So obviously that, I could understand why people call this the cycle high. And it was indeed the cycle high, but price made a higher high over here. And it did that because of adoption. That was much different. It wasn't the halving of the miner's reward, which then caused the supply shock, which caused the halving as in previous cycles. So that's different. He goes on to say that, like, he's making that point that I just made to you over there, that, you know what, indeed, like in 2021, we did see the higher high. He says that his expectations are that we see this currency. Let's read it over here really quick. I don't want to mince words over here. Reminders that the last halving cycle top was March 2024 at $73,000. The cycle started in May of 2020. This cycle started April 2024. And in the past, there were earlier tops, the April 2021 at 64K and the November 2021 at 69K. Cycle end estimates March 2028. Saying the next halving right now, it's every 210,000 blocks, is going to be in March of 2028. So for cycle top calls, the Q4 of 2027 or Q1 of 2028 is a 4-year interval from prior cycle top. Where have we heard that before? Obviously, this has been our base case, our premise of what to expect. I like this visual, and I think that here I like this visual. Bitcoin is beautiful. $121,000 Bitcoin. This is what started it all, by the way. It was over here in January 2022. People looking for videos about the current work that we're talking about on expectations for the cycle. You could go ahead and you could look in the live tab on the YouTube channel, go back a few weeks, and you'll see videos appropriately titled Oh, you guys got the bar blocking the view. I thought I corrected that right from the beginning. Apologies. CTM, what's going on, everyone? Glad to be here with you all. If you go to the YouTube video and you look at what's going on in the tab view and you go back a few weeks, you see lots of videos talking, or you see videos talking about expectations for this cycle and why. But the first video was done in January 2022. And in January 2022, as that first hint that the 4-year cycle had changed, was then we went ahead and we made sure that we stayed ahead as far ahead as we could. And then we talked about hype phase, facing reality phase, and ultimate market opportunity phase as the jump of adoption takes place from the early adopters into the early majority phase. Early majority phase is now upon us, and we've seen some major catalysts. We've seen things like US government embracing Bitcoin. That was one of the biggest overhangs of Bitcoin's path to adoption. And then, of course, we've seen the approval of the spot ETFs, and we've seen Wall Street is here, BlackRock is here, the institutional money now coming in, the corporate treasuries. A major change in adoption is taking place from early majority, all of you, or early adopters, all of you, into the early majority. The reason I had this blocked in the beginning over here was, this is the slide I want to get to, but the reason I have this blocked over here, the sidebar, is because the price it throws people off. If I show the price, I want you to focus on, you're looking at an overlay of Amazon, and we've looked at how that looked on Microsoft. Microsoft, obviously, it was during the 1990s, it went through the hype phase and then into and out of the facing reality phase with Windows 95. And then it had another facing reality phase after the dot-com bubble burst, and then went into another ultimate market opportunity. We've looked at other assets such as Tesla, such as gold. Nvidia does the same thing. Even things like, you could see Airbnb going through a facing reality phase. I wonder what the chart looks like now. I wonder if that's a good one to look into. But here you're looking at Amazon, and you could see that Amazon went through a hype phase, then the facing reality phase, and then you could look at the price structure aligned with Bitcoins right now. I mean, this is uncanny in so much as that they both have their hype phase, and for sure they have different, lofts to their hype phase, but look at the structure. It's during their facing reality phase. For Amazon, this is the early 2000s. And look at, I mean, it's uncanny how similar they are until they even make it out of their facing reality phase. And then look how the structure winds up becoming so closely aligned. Could you envision? Could you envision if something similar? Now, I imagine there's going to be variations going forward. I'm just trying to illustrate what a walk up towards, and we'll call it to be easy, towards a million will look like. And look over here. You had, I love this. You had a little bit of extra hype come into the market. And I think Bitcoin could be different. I think if Bitcoin were to have an adoption event, such as the United States of America, like passing legislation, the Bitcoin Act, to accumulate Bitcoin, I think that it's going to deviate towards the upside a lot quicker. But could you imagine? And then look what happens after. Imagine our sustainable channel that we talk about together and a breakout to the upside. What happens after the breakout to the upside? Accelerated price behavior is expected, and then after, a reversion to the mean. And look at that reversion to the mean that occurs right there, except it didn't enter into a prolonged bear market. It did not enter into, it was able to go ahead and flush there's the liquidity grab to flush some downside, but then soon after, if it happened on a similar timeline, and I don't expect that it will, if something like, if this were, and you were to see some elevated price action into next fall, a lot of people are expecting into this October that we're going to see some elevated price action. We'll talk about specific price targets, and then we'll talk about, as the question was asked, what mine are as well. And what happens if that occurs next year. A year from now, next fall, you see that elevated price action, right? And then you could see this drawdown, and that's a legit drawdown that's occurring right over there on Amazon at the time. I don't know if it's 30 or 40%. I think it's 40%. I would love to go check with you during this session because I want to know exactly what it is. I think it's 40%. And I think as Amazon obviously had significant corrections early on, much like Bitcoin had, Amazon had a 95% correction, and then it had multiple big corrections. But in this phase, it had multiple 30 and 40% corrections. I think this is a 40% correction. And then you could see soon after, could you imagine this coming into the halving, the next halving? Bitcoin able to go ahead. Here's March 2028 when Adam Back is saying, between first quarter and second quarter, right around the timeline that we've given. We've always said to you, listen, Bitcoin it's not left translated, and you're going to see those calls right away. Once people come to the conclusion that this cycle is different and there's a changing behavior in the structure, the next thing that you're going to hear again is, oh, well, after the 2028 halving, there's going to be a left translated cycle. We saw a lot of calls for that for this particular cycle, and very early on I addressed that and I said, no, that's not what you're going to see. You're not going to see a left translated cycle. What you're going to see is you're going to see actually that the cycle top is going to be a lot closer to the 2028 halving than the 2024. What's the halfway point? I guess the halfway point comes right around here somewhere into by the summer of March, we reach the halfway point. So here we go, and we continue on. And what else? This would be something more along the lines of, and let me remove that bar. That's why the reason I want to hide the price bar whenever we look at that chart, because I want people to focus on the changing structure and what expectations are as we move towards those top deviations from the hype phase, rather than what the price is aligned with that fractal of another asset going through similar adoption. The price is not what I'm concerned with. It's more along the lines of the structure, being able to set your expectations. If I was leaning into 4-year cycle behavior, so what are we talking about? I guess we should have started with, we should just have Bitcoin highlighted. And I want to get into the habits of being much better at doing this with you all. And we don't have that today. We have Bitcoin top. I guess we can move towards Bitcoin top now. And I'll make sure as we look at this, I'll also talk to you and highlight what some potential expectations as far as price and when. And then by the end of the year, even though I don't think Bitcoin tops this year, what I believe that expectations for what price could be. And I know we looked at that before, but we'll look at that again. And it's crazy to think about right now as Bitcoin is trading at $121,000, that Bitcoin is roughly 25% away from trading at $150,000. I think looking at $0.1 million was a major milestone. I think for me, the next major milestone is going to be something like, 0.5, $500,000 is going to be, when that happens, it's going to take a second for it to sink in to all of us, as it will when it hits the 1 million. And I do believe all those things are going to happen. They're not a certainty. Obviously, they're dependent on a couple of things, and the couple of things are the debasement of the currency, which is a mathematical certainty that the dollar will continue to be devalued, as well as the future adoption of Bitcoin. It's very clear to everyone right now the accelerated adoption that's taking place. Are you all aware of the chatter about the incoming buy set up by Ethereum treasuries coming into the market? Has anyone been tracking over here as Ethereum is flirting with that $4,800 mark over here, new all-time high. Yesterday it was brought up that people were thinking, Bitcoin reminds me of that December 2020 into January 2020. And then we looked at, well, that doesn't really align, but it sure does with Ethereum. And Ethereum back then in December 2020 was able to take out that all-time high. And then after that sharp ascent up into it, to continue up. And that potentially could happen here on Ethereum. They're talking about Bitmine, Tom Lee's Ethereum treasury company raising said, and I saw the document, getting ready to raise $20 billion to buy Ethereum. Absolutely, and then between other Ethereum companies, $26 billion, including the 20 billion from Bitmine, potentially getting ready here to buy Ethereum. It's absolutely some astronomical numbers if that were to take place. Peter Thiel, by the way, Peter Thiel of Palantir, of PayPal, of Facebook, the first institutional investor into Facebook. He also not only took a position in Bitmine, he's taken a position in another Ethereum treasury company, public company. Guys, Peter Thiel is not someone that you want to really he knows what's up. Let's leave it over there. Do, 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 do. Do, 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 do. Anyway, here we go. Let me go ahead. I just had to bring up what's going on with Ethereum, and that I think worthy news that are they going to be able to raise $20 billion? That's what I first thought of when I heard that. If they try to raise $20 billion and they're not able to, that would be a significant blow against the company, I would think. But when you think about the friends and colleagues that Peter Thiel knows, I imagine that they're not looking for that raise if they didn't think they could do it. Cabby, let's continue everything. I'm going to pause here on this slide and come right back to this slide. I'm going to pause off of Bitcoin top and come right back to it. Let's briefly talk about our positions, and we will talk about I want to bookmark a couple of questions over here, right? Just with I'm going to come back to this one in 1 second. Yeah, and this is great too. Man of Whispers, when we get to the Q&A, this one is bookmarked for that, and we'll come back and we'll talk about Bitcoin miners. And yeah, there seems to be a lot of competition out there, right, for the Bitcoin miners. And one of them obviously were the Bitcoin treasury companies. And a lot of speculation this cycle, no doubt, was in Bitcoin treasury companies. And then you're seeing, obviously, right now, a lot of that speculation move towards the Ethereum treasury companies. However, we got to look at the charts, and we have to find out what's going on the charts. And a lot of these instruments have a habit of surprising people. So I think it's worthy of taking a look at them instead of like being like, a monkey looking at where things are popping and then trying to smash over there, and people are late. We'll take a look at the miners as well. Let's take a look at what's going on here with our positioning as it's related to here to Cabby talking about selling Bitcoin to move into Bitcoin. And we'll start over here on the CTM algo dashboard. And this is a great actually tie-in over here to CTM X V4. It has been a while since I've given an update over here. The last update was a month ago. And I went ahead and I posted this video in the description. 7-minute video clip, a summary of the coming V3, V4, right? So we have CTM 2.0, the original. Built on top of that was CTM V2. But you're talking forward tested CTM 2.0 since the summer of 2022, 3 years now. Right after there, about a year after, CTM V2 was dropped. It's built on top of CTM 2.0. It has added to the CTM filter. We have 3 other filters that were added to it. Same system. We were worried at the time, is that going to lead to overfitting? Is that going to lead to curve fitting? We were very hesitant at first. And then, you're talking now a couple of years of forward testing, and those concerns were subdued. And now this is a year and a half in the works here. the approaching the release here of V4. So V3 is rolled into V4, and this is the same thing built on top of V2, which was built on top of CTM 2.0 with a massive amount of money management added to it. So it was the money management is taking it to the next level. And the release is almost upon us, except 1 month ago, and this is what I'm gonna do when I get back from the mountains. Next week, I'm gonna dedicate a session to showing you during this 7-minute review, and these are spectacular templates during this review though. But since then, in the last month, we've continued to make a massive amount of progress. And don't forget, I didn't want to have the final release until I felt that we've been able to put in the best work. Because once it was released, you know, we've had one update on Ethereum on our V2, and that was basically learning to toggle off one of the filters depending on if Bitcoin bull runs was in the trade, showing that there's upward momentum or not. And then we also had, a year before that, one adjustment to the stop loss on Bitcoin on the buy side. So it's pretty much, when released, it's expected to be stable version from then on. So we want to make sure that we have the best of the best. And since this a month ago was shared, bookmark this video. Watch this video over here today. Since this was released, you're going to see next week when I present you before the final release, the massive amount of improvements that we've been able to make. So it's well worth it, on schedule, and weeks away. Let's say weeks away until the release. I haven't given an update because we've just been working. But there you go. That's CTM V4. And I think it was Babylon. Shout out to Babylon, who set out the reminder to make sure that got done. CTM algo dashboard. We're looking here at Ethereum continuing to build out over here. Open position, 26% into profit. Solana just entering the market over here. So for buy side boosts, that means profit taken, 1/3 profit taking off the Ethereum trade as Solana enters the market. Looking at Cardano entering. By the way, Cardano entering. This is the newer, the almost ready to go versions over here. And some are on V4 and some are on V3. The ultimate release, they'll be combined into V4. But Cardano here just taking that same entry. Important to show that Cardano just took that same entry as the new entry into Cardano, and Bitcoin bull runs continues to hold. Nvidia, 25% into profit. Tesla's new position, 1% into profit. FANG taking a beating, down to 3% today on entry today. And you're looking at TQQQ holding 41% into profit, hold and push those winners. And then you're looking at IBIT over here. This could be traded on any spot ETF. IBIT, obviously, with the most volume, holding at 4% into profit. And MicroStrategy, talking about those Bitcoin treasury companies, remains under pressure. And you could see that. Let's take a look at MicroStrategy, our only template for the equity markets that's currently out of the market. And we had that last launch. Look at this pattern, because we're going to look at Riot in a minute. And you can see the breakout. And then we had to get out of the trade. It was a break even, small profit. And then out of the market, you had this discretionary breakout occurring, and it's still retesting that. So, MicroStrategy has the potential to play catch up. It might be dependent upon what happens here with Bitcoin's next move. A lot of people, I think, are growing a little bit tired, patience wearing thin on their expectations of what MicroStrategy was going to be doing in relation to Bitcoin. But from my perspective, I believe MicroStrategy will do MicroStrategy things in the future. I think that we've done a good job warning and subduing expectations, especially when, sometimes I call it, people don't like it, like diluting shareholders, and which has been happening. But for the sake of purchasing more Bitcoin, And obviously, people believe, and I agree, that once Bitcoin goes on to do Bitcoin things, it's going to go ahead and be translated into Strategy's price. But that's the benefit of CTM and knowing when to be in the market, when out, and on what side. And it's absolutely priceless. When MicroStrategy returns to kicking up on momentum, we will be in it at that particular time. Here's some year-to-date performance by hedge funds, and you could see that their systematic macro CTAs are in their worst drawdown, suffering. This is our competition. Look at these returns over here. You can see it a little better looking at over here. And CTM, I mean, we're just cruising, like on the right side, absolutely cruising, destroying performance of our competitors. Woo. So the question specifically was about taking profit on Ethereum, on Bitcoin, and moving that into potentially looking to move that into Bitcoin. And I think that's the nature of the buy side boost. So if you believe that you don't know what's going to happen, you are first of all setting yourself up for success. Number one, if you believe that you don't know what happens next, you're setting yourself up for success. That's a great lead into this over here. So let me just go ahead and just bring up this on the slide over here. And this was brought up today. And boom, Francis, we're gonna get to your question for sure. Appreciate you being here for sure. Look, this is from Gregory, and this is so important. I feel like this is CTM in like early 2023, and I feel like we spent 6 months so much focused in on iron sharpens iron and the psychology and what it means to be able to focus on execution. Remember that video I did in 2021, and I talk about execution is everything in the intro, in a lot of the intros that I had done. Execution is everything. And this is a great reminder here. So this is right now, I'm just planting the seed. I'm going to keep this up just as a slide here for myself, so that as I get back from the mountains, I make sure to focus in on, and probably not a live stream, probably doing this as a thoughtful upload that could really be like evergreen, because it's so important. Could we potentially have a session on psychology, specifically in relation to executing our systems and all the rules around the systems? I think it would benefit the group and myself a lot, as well as a good reminder. Even though many in the group are following the system great, I'm sure I think a revision session, or a summary session, a review session to really remind everyone and ourselves to keep on the right path would be really valuable. I think that your way of presenting such a session could really hit home for many and potentially reveal some insights that may have been forgotten over the years. And it's so true. Just because we spent so much time in 2023 honing in on this particular skill set, it doesn't mean there's a lot of people that join us since. There's a lot of people that weren't able to take in those lessons, and that needs to be revisited, and it needs to be summarized, and focus on the most important piece. Because guys, the most important piece of all of this is having a strategy that could outperform the market. And then when you talk about a strategy that could outperform the market, when you're talking about a strategy that competes with the best of the best. But that's the hardest part ever. Few could ever do that. But once you have that, that's done. Then you have a whole new set of dynamics that you have to deal with, and they're all psychological. And you have to focus on execution, and that becomes the single most important element. So beautiful, so important, incredible. We're gonna do that, and in that, I'm gonna also mention the positions here. Something's askew. Hold on. Oh no. Okay, I got it. We're not doing this today, so that's why I had this off. All right. So, yeah, for sure. And you know what? I'm gonna leave for the video. There's a secret trick to all of that. There, there is a secret trick to all of that, and I'm gonna go ahead and I will share that in the video. Positions, that's great. It does. You can look at Solana and it's entering at a pretty high deviation. Look back over here though, and look at the deviation. It was similar. We had some bangers on Solana back in 2023. Let's look at where they were. It's pretty close. I'm sorry. My eyes are focused down over here, and I'm looking at us taking an entry, and the deviation's around 20. So I'm just looking at some past trades here to see when Solana was entering into the market, and because it's stretched and it's high. So 2023, I felt like we always feel like Solana enters late. Here's another one entering around 20. The momentum did kick up. That's a nice trade. Um, yeah, this is a lot lower. This is a lot closer to the zero line on that entry. I agree. It feels like momentum is extended. It feels like the entry's late. But hey, this party could just be getting started as Ethereum is getting ready to flirt with a new all-time high. Bitcoin, did you just see it flashing on? Buy side only, flashing on, buy pending for the next signal period, 7 hours from now. And that would be taking profit over here from, this 27% unrealized profit. What buy side boost does is it takes 100% of the count, and when Ethereum entered first, instead of just entering with 1/3 of your account balance, it enters with 100%. So then when Solana just entered the market, you take 1/3 of the profit and then you enter that into your Solana trade. So now this is still holding 2/3 of the profit. And as Bitcoin enters, it would exit that last third. So you're essentially taking profit. It's an efficient use of capital. That yeah, I don't Graham, that I think what happened with BlockFi was an absolute horrific black mark on the space, and it set a lot of people behind, and it's tough for many. So let's revisit that. That's probably the most important thing that will come up today, and I'm gonna hit on this for one moment, and that's real and that's deep. So what I'm going to hit on though is this. I like how you said it has taken a while psychologically to get back in the game, and I just want to just try to set perspective. I think that these next 10 years are crucial. We talked about often early in CTM that most people overestimate what they could do in two and drastically underestimate what they could accomplish in 10 years. That's obviously true, right? In so many different ways and aspects. But if you go back to, let's say, let me come back to and just hear me out. Pretend Bitcoin's trading at $6,000, and 2018, and then move up into the end of 2021, 60K, 10x on Bitcoin. And there was a lot of opportunity back then. A lot of opportunity back then. And that opportunity is gone. It's no longer here today. And when I say it's gone is, for much less fiat, the ability to purchase much more Bitcoin was available. And we still, if you look at Bitcoin right now trading at $0.1 million, you know, I I envision, I think it's highly probable that we're going to see, a 10x in Bitcoin. And I don't think it's in those 10 years, and probably 10 years is a wrong estimation over here. I should be talking a lot more like 6 years. And within that 6 years, I think there's an extremely high probability that Bitcoin does a 10x, which means that, there's a similar opportunity that occurred from Bitcoin going from 6K to 60K. I think it's extremely more probable because of what has taken place as far as the adoption and the network effects that it's going to happen. I think it was a much more risky investment back then. I think it's a less risky investment right now, but you got to you have to overcome the past and you have to make sure you get very diligent about preparing for this window that we have because there is there is time right now to save in Bitcoin, and there's time to save in Bitcoin and see a significant appreciation of that capital that's saved. And then, eventually outside of things like hyper Bitcoinization happening, it's going to become less and less and harder and harder. That's not lost on me whatsoever, my friend. Oh, Robert, smash the like button, everyone here. Absolutely. BlockFi and Celsius and then the thing is that Bitcoin lending is beginning to become much more, I think, utilized in the future, and it comes with the stigma of what happened in the past. You have companies like Strike, for example, and they lend out. You could borrow against your Bitcoin there. It's a very high interest rate, but nevertheless you could do it. And obviously it looks like in the future probably you go to like Chase Bank or whatever or Citibank or Bank of America and lend Bitcoin and borrow against it probably for a lower interest rate in the future, not today, but it like you never know. Like BlockFi, their business model was actually taking your Bitcoin to speculate to pay yield. I don't know whether or not Strike is hypothesizing your Bitcoin. Rehypothec Hi guys, whatever. I don't know if they're doing it or not. Jack says they're not. Other people have said in the loan agreement it opens up the potential possibility that they're doing it. You got to verify, you can't trust. We don't know if it's happening or not. At least it's not in their business model that they say that they're doing it, right? To pay yield. They're not paying yield, they're collecting interest. Now, seems like a better model. Today I saw that who's that early baller hanging out in El Salvador with those Max Kaiser. He's talking about how El Salvador right now is borrowing against their Bitcoin in order to build out infrastructure. They just built 2 bridges. And he's saying that, you know what, they're just never going to pay it back. That the amount of the amount of fiat that basically they've borrowed against will wind up becoming nothing compared to their Bitcoin holdings. And now you're talking about countries borrowing against Bitcoin, and the only reason I'm bringing that to light is because as Max is talking about that to millions of people, and a lot more people are looking about how they could borrow against their Bitcoin, and it brings back what happened in Celsius and BlockFi, and it was very, very dangerous. I wonder, you know, anyway, I wonder. We'll just leave it at that. Yeah, I mean, that was I remember what was that famous tweet by Elon Musk where he's like liquidity acquired or something like that. Tesla was on the ropes and or anyway, I don't know if it was Twitter or Tesla and you know, he put the SEC investigating for it. I remember Sam saying that they were going to be absorbing BlockFi, but Sam was lying about their own situation. It was a horrible situation. Well, hold on. We have to get to 2028. There could be lots of there could be lots in between, you know? I'll just see first if I missed any questions. So we got through our positioning for sure. And we're look good and strong. And I got a whole bunch of other questions I need to get to. We'll come to them. This is the only one I didn't understand though. I don't see QE incoming at any moment or anywhere close to that. I think we're at the point of the Fed cycle where they're going to be moving to stopping QT. The most important question for me is, do they just pause the balance sheet or does it begin rising? If it begins rising, that's super conducive for risk. And then where they begin lowering rates. Yesterday we saw with the CPI, and hold on one second. Yesterday we saw with the CPI coming in benign that the expectations for the September cut were more ingrained. The probabilities doesn't mean it's going to happen. And we have a lot more data coming, including tomorrow. We have core PPI. We got retail sales. That's hard data. That's important for us to watch. We also have unemployment. This has been flat since forever. If there's a surprise there, something that could move markets as well as consumer sentiment. So, point being though, is that the market's reaction yesterday towards the Fed likely being set up to cut in September was favorable. And that's something we want to watch. If the probability and odds were that the Fed is going to be cutting and the market sold off on that news, that would be a warning sign as the cuts approach about what could potentially happen. Now that's just one day, it's just one data point. It's just a piece of the puzzle to help us put it all together. But I think the next phase of the Fed cycle is them stopping QT. We have to watch what happens with the balance sheet thereafter. And then also when they begin cutting, rates right now remain very elevated. I don't think that we're looking at anywhere close to seeing anything like QE coming into the market for any reason like that. Jumping back. Yes. The Fed legitimately is walking a fine line between the job market and inflation. And I don't for sure and rightfully so. So like, we saw one print that was alarming for the job market, and we continue to see inflation. It's still elevated year over year, 2.7 from the official numbers. It's still very far away from the targeted goal of 2%. Are they going to begin cutting with inflation near 3%? Likely eventually, but when that happens, that's a big miss. They missed their target by 50%. It was a horrible miss, and the Fed has every reason to not cut as well. But they're going to need more cover. So let's see what we have not only tomorrow's inflation data, we got another non-farm payroll coming up in September, and another week of inflation data right before the meeting. We'll find out. And QE, I like outright QE. I don't think that's coming anytime soon, though, Alexei. But I don't think that comes until they're forced to. The Fed never wants to go ahead and have a sharp devaluation. Now we could have something that is called, QE but not QE. And when we come to QE not QE, don't get it wrong, it is QE, but it's not outright buying of treasuries and that's of securities. That's not happening until it's absolutely needed. But we don't want that to happen. We want extend the cycle out as long as possible. That's our goal, because as long as we're in the sustainable channel, as this adoption momentum picks up, that is there you go. That is the sweet spot. That's the sweet spot where we continue to ride. All right. So we're talking about a lot of things. I haven't even gotten over here yet. And listen, summer sessions, everyone, thanks for being here. I love spending this time here together and building what we build. And the Fed's massive debt also takes us into this position. Well, they don't. Robert, you're right about that. This is so important. Like, yes, the Fed could lower rates, let the US roll over this debt at a lower rate, and then go back to raising them. Then people are like, well, that would bring into question the Fed's independence or the Fed's whatever, well, that's already in question. Who cares? Like, if it's the central bank of the United States of America, it should have the interests of the United States of America at heart. And whatever that number is, it's been exasperated by some people, but like roughly a realistic number is, these elevated rates are if they're costing an extra, let's call it just under $1 trillion in interest rates, as if they were to lower them a little bit and allow the U.S. to roll over the debt, uh, and it creates a bigger problem down the line. Obviously, the deeper the debt goes, they're paying a massive amount of interest on the debt. I got sidetracked a little bit though, and I just want to fall back over here to the Bitcoin top, and I want to talk. I'm going to leave Q&A highlighted because it's kind of related to both of them. You're right, and if I was following 4-year cycle and if I didn't see the differences that I see in pointing them out, and this is aligned strongly also to the macro, right? If at any point in time Bitcoin or the US economy enters into a recession, Bitcoin is not immune. Yesterday we gave some very realistic rules of thumb for expectations if the US enters into a recession, what to expect with Bitcoin. And obviously then, is it a recession? Is it long lasting? Is it long lasting? Does it become a deflationary spiral? A lot of unknowns that no one could. So many people have these ingrained ideas about what's happening, and I'm like, let's navigate it all as it happens. Let's make sure that we do our best to stay on the right side, because between now and 2028, easily we could see some corrections on Bitcoin. Now, my expectations are that we're not going to see a 12-month bear market or a correction that's 75 or 85% in drawdown, as we've seen in all past cycles. All of them relatively had a 12-month bear market, which saw also that drawdown 75 to 85%. I don't know what between now and 2028 the greatest drawdown is going to be. Thus far, since the bull market breakout right over here, call it January 2023, there is no the greatest drawdown has been 30%. And likely that continues unless there's, a major event. If you see the NASDAQ correct 40%, do you think that Bitcoin's correcting 40%? Likely, at least. Do I think that there's I personally think there is an extremely strong chance that we don't see anything close to a 60% drawdown. I don't think that that's in the cards. And what's interesting about that, I'm trying to reconcile something over here and I don't see it. So these are the bull market corrections. Okay. This is important. This is not including bear markets. Obviously, corrections in bear markets, again, it's either been 85%, 84%, and then 76%. I mean, you could see there's a trend there in diminishing downside volatility. It's going to become more apparent off this cycle. This was a bull market, and you saw a correction of, I don't know, 60%. It's over here, 67%. This was during the lockdowns, and that's a major correction. I don't I don't think under any circumstance, this is what I think. I don't think under any circumstance between now and 2028 that we have a 60% correction greater than. Now, yes, I'm going to change that if we see that the US is entering into a serious situation. But I'm going to change that view so well far before it happening that it'll be apparent to everyone. The macro can change rapidly. There's no question that anything could happen. If the US winds upon disaster, it then of course we're going to be looking at that train coming from far away. Nothing that I see right now suggests that Bitcoin should have a correction that greater than 60%. Now, I don't know that. I don't think that's going to happen. I would think that in this area over here between 40 and 50, I think there's a higher probability that we see a correction of that magnitude. And it doesn't mean that we're going to. It doesn't mean that we're going to, but I think that if we were to see a significant event, and that would come off of, by the way, you would see if that is happening. I'm going to point this out to you really quickly. In order for that to happen, we're going to need to break out of the sustainable channel to the upside. Sustainable channel, if we have an upside break, and if that break has to do with the Bitcoin Act being passed, if the US is buying 200,000 Bitcoin for the next 5 years, a million Bitcoin, and then bringing on not only that themselves having that type of bid in the markets, because you're going to see, you know, like if there's a $26 billion buy incoming to Ethereum, you're going to see the magnitude of the move on the upside. If that happens in Bitcoin, in so much as that governments are passing legislation to buy Bitcoin, and that brings on obviously the front running by other entities, institutions, families, offices, other countries, you're going to see elevated price action on Bitcoin. And I don't think that it's going to I think it's going to be, you know, for an example, and it's a bad example, but let me give it to you. And you could see like, picture this elongated, like the 2017 bull market in Bitcoin, that all of 2017 up. Imagine that for an extended period of time, right? And I don't think you're going to see a quick reversion to the mean because of it. Now, if that's not happening and Bitcoin breaks to the upside of the sustainable channel, I think there will be elevated price for a period of time and then a sharper, stronger mean reversion. If that is happening, I think that there's a strong probability that we're going to be testing into this area here on a drawdown after it. That only makes sense. It's just the reversion down to the mean for what's going to happen. So I think that I'm very clear, and I hope that that is articulated very nicely for you about expectations here. And you could see the sustainable channel, right, that we're currently in. If we break to the upside of it, if we break out over here to the upside, at any point outside adoption event, my expectations are watching for where that will peak. So notice one thing, because this is very important. We're talking about the cycle top, and the name of or in the title of the video, it says the price is not so much important as the timing. And that is critical for what I'm explaining to you. I'm giving a clear signpost. If price breaks out to the upside of the sustainable channel, that means that we're looking for an increased momentum in the speed of that price appreciation. And then after, we will be looking for a sharp mean reversion downward. So that's a place and point in time to be looking for what we would see as, is the top, quote unquote top, because again, even if that happens anytime soon, my expectations are before the 2028 halving, we're going to make a higher high, just like happened here in this cycle. And unlike this cycle, the duration and the magnitude of the drawdown will be less. Okay. Yeah, and it could just look different though. And we've seen, like, even since 2023, we've seen 230% corrections. That's like a substantial. You're talking in a mere 2.5 years, you've seen the price of Bitcoin correct 30% twice, and then multiple three other 20% corrections. That's a lot. That's that those happen often and really big. So I get borrowing against Bitcoin. We just talked about the stigmata. That's the stigma. That's the stigmata. The stigma that's attached to it, rightfully so. And then we talked about potentially asking the questions: is it different if they're not the Bitcoin that was lent out is not being used to seek yield as elsewhere? Is it then you have to only worry about things like the loan to value ratio, and because if Bitcoin has if you borrow against Bitcoin and it has a 50% correction, you're getting a margin call. That's something you have to worry about. That's an enormous risk, because even though my expectations are that we don't have, even in a bad circumstance, 60% is the extent of that mega correction to come, and more likely 40 or 50 seems a higher probability, doesn't mean it's not going to happen or can't happen. But you know anyway, I'll leave off on that. That was Robert. Not only that though, we we went from a very bullish posture, riding the melt up, and it was a melt up in the markets. It's starting in equity markets, October, November, Bitcoin joining in, Ethereum joining in, and through February. But we pivoted, and I say the markets are not crashing. We rode the crash down, and if you it's on video, it's all on the YouTube channel. There was no one else out there bearish at the time, and there was no one else that was looking. We saw the crash coming. We held our positions. We turned them into position trades, wrote it down like no other, and then finding the bottom, it took a few weeks. And then by April, it was like you are forbidden to sell. It is buy only. It took to that summer. It what like insolvency event is coming upon us. Raul's got some great misses, but by the summer, everyone else figured it out, and that's a long time a ways though, no doubt. That was, you know what? And that's a great testimony that if things change, I expect that we'll be able to see it and navigate it. This is my current expectation of something that we're going to see. And it's not this blow off coming into September, October, and that more likely we're going to drastically undershoot past 4-year cycle deviations, and we're going to continue within the sustainable channel. And then I think a lot of people that at that particular point in time are going to be talking about um sorry, it threw me off. I was just thinking about that. Uh More Nasdaq or more S&P 500. And don't everyone, my expectations for equity markets, coming into 2026 are quite bullish, which aligns here to my expectations. Now, again, and just for those that are new here, we have a major event coming up of the cycle, and that's when the Fed begins cutting. And just look at the recession cut, look 3, 6, 12 months out, look at the normalization cut. That matters. And even look at the 1 month though. 1 month is a little bit shaky. People don't know unless they're cutting into that recession. Those are some historical clues that we could take a look at. So a lot of people are looking to unload some Bitcoin into September, October, November. And if that doesn't happen and we remain in a sustainable channel, if Bitcoin is trading somewhere between the best estimation, most bullish, and this is dependent on, do we continue to hold the breakout? And that's not the breakout. If we continue to hold the breakout here, right? My most bullish estimations about where we'll be into the end of the year is like my most bullish estimations of technically continue to hold here, 150 to $170,000 Bitcoin. That's my most bullish estimation, and that's possible, and most bullish. Could I envision us trading between 130 and 150? easily. That's super bullish if we're able to do it, you know? Sustainable channel into the end of the year. Let's look at that. Into the end of the year, into November, December, right? 155 is just the mean. You can see the mean over here. And that would be super normal for me. If we're able to get, this is bullish. We have a bullish breakout underway right now, if that holds. Towards the top half where you get oversold, that's somewhere as high as, let me extend this out. Yeah, 170. That's my most bullish, right? It seems very good estimations. Could be trading, somewhere around it's still bullish for me though, right? 130 to 150 I said. Yeah, that makes sense. I'm giving you basically, and I'm not talking about the outside lower or upper deviation, and sustainable channel anywhere within here is just realistic to me. I could make that a little wider, right? So from down here to all the way up there and within the sustainable channel, that's my expectation. That's as clear as it could be. And that's the most likely about what happens. Now, if you look at something I think it's important to look at, and that you got JD over here, JDK analysis. And I think it's a great analysis. If I was following 4-year cycle behavior, this is what I'd be following. And notice though that the RSI in previous cycle tops was pretty had made it to very overbought. Does that mean it has to happen again? It doesn't mean it. I mean, even in November 2021, the RSI put in a massive bearish divergence and was not overbought at all, but it had been previously. But we're not close to that. We're not close to a RSI that's overbought. So should you be looking for a top? I think it's, earnings. We've looked at very carefully, methodically, signs that the macro cycle here is going to continue. And, of course, you can make a case either way. But there are positive resurgences occurring. One of the most important here, as you look at equity markets, is earnings, right? And earnings and expectations are increasing. It's in bear markets, it goes the other way out. So JDK is putting a very clear, and again, I would say this is high value 4-year cycle analysis. He's putting the peak into that October-November window, 2025, and as high as $210,000. And, and I have to say, JDK he's also closely watching what we're doing, because he's also said, look, he's open for anything. He wants to know if he's wrong, likely what's right. So he pays close attention to what we're doing and watching it. But I think it's an excellent estimation. And I would think that if Bitcoin is trading anywhere near $170,000 at that particular point in time, you would see a lot of people looking to exit Bitcoin. And I think that becomes a concern. The damage done from BlockFi, the damage done from Celsius, the damage done from FTX, it put a lot of people behind. And there is the potential. You have to really look at all your risks. There is the potential that if you're selling Bitcoin at 170,000, well, let's look at that also. That's not so bad. This is really not so bad at all. If you were to sell Bitcoin in December at let's like this looks lofty to me, right? JDK giving out 210 as expectations. Let's say Bitcoin hit 220. I'm just doing because it's the line over here. I guess we should just use 210 as he says. If Bitcoin hits $210,000, you exit Bitcoin. I think that there's a substantial chance, a high probability that you'll have the opportunity to buy back lower, all the way out until you start getting towards the summer of 2028. Then I don't think you'll have that opportunity again. But I think that someone who exits Bitcoin at $210,000, there's a high probability, a substantial opportunity that between January 2026 and for a 2.5 year period, there's a good chance that it's not like you're getting left behind. Even if you were buying, like if price continued to walk up like this, like even a correction of 30% should bring you back towards that $210,000 level and at least give you the opportunity to get back in where you got out. But I don't know. I think that's a sincere way of looking at it. I think it's important to look at as we get higher, as we get closer into here, if price is trading that high. I don't have those expectations whatsoever that price will be trading that high. And I think that the best way for me to look at that is this channel over here. Anyway, I'm floating a little bit, so I want to get back into it. I think that there's an extraordinarily strong chance that that is what is going to happen. Let's take a look at some questions. Well, I think this answers this one. And like, here's the thing. I'm only concerned about where I'm wrong. And we have the Fed potentially getting ready to cut rates into. So if the Fed doesn't cut rates, that's extraordinarily bullish, by the way. And every time that the market was looking for the Fed to cut in this past, year, and they didn't, markets continue new all-time highs, and that's likely what would happen if the Fed doesn't cut in September. But what the point where they begin cutting rates, that's an important critical point for two paths, and it could align with 4-year cycle behavior easily, in so much as if the Fed is cutting into a recession, does not seem as if they're cutting into a recession right now. If the Fed is cutting into a recession and markets, are down 11%, S&P 500 over the next, 12 months on average, let's say that means that the NASDAQ is down 20%, that means that Bitcoin's likely down 20%. I guess it depends on what the magnitude of the recession is and what markets do in response. And there's way too many variables and to talk about. So in that, I guess, benign, the average of what's happened over the last 100 years with S&P 500 cutting into as the Fed begins cutting into a recession off 11%. If that means NASDAQ is off 20% and Bitcoin, 20 to 30%, that's not a bear market. That's not 4-year cycle behavior. If, in 2027, Bitcoin makes a new all-time high. Anyway, we talked a little bit about this one, but I want to look at the chart of Riot as we do it. So let me just jump back over here. Let me take a look about what's going on in the markets. And let's jump over and take a look at Riot. And then we can look at Mara. They have similar, not the same. All right. So this is a similar pattern that we've seen earlier in the session looking at MicroStrategy when it had this major impulse up. And then it went through this drawdown, mega drawdown, even making the lower low. This pattern's happened on MicroStrategy right now. It's happened on Bitcoin. We looked at it where it failed on gold. So it's a common pattern in the market. And then after that liquidity grab, shoots up and enters into a launch pad. And Riot looks like it's taken out that. Not yet. Yeah, see that? That looks like much like a failed breakdown back into here. Getting ready for a sell impulse too. That does not look good. That does not look good, you know? And so to repair this, this is a liquidity grab and then a breakdown. It hasn't closed outside that. It's on the verge. Let's get as exact as possible. This does not look good whatsoever for Riot. Well, it has the potential here to save it. And it's going to be like as safe as possible as this. And if you break down from here, that's now a liquidity grab into sell post that does not look good at all. And I'm looking at MicroStrategy doing a similar thing over here right now. And so here's that move up, then the down, liquidity grab, retest. Did this take out a lower low over there or not? No, it doesn't. The move up, setting up the launch pad, the breakout of the launch pad, and then this thing has failed too. We got out of it. But you could see that it looks healthier than Riot. Riot does not look as healthy as, because we're still trading above the breakout of the launch pad. Here's the launch pad. That's the launch pad. And breakout retest, the next buy impulse still hasn't invalidated it, but Riot is below its launch pad breakout. So I would think, or if I was interested in where I wanted to put my money in the two, I would be like, MicroStrategy seems to be showing relative strength. Now, just because it failed here doesn't mean that it's not going to get a second chance, and it could. But I think it was brought up very well when you went further, because we've all definitely witnessed the rotation into alts, which happens to obviously select and better, into the speculation into Bitcoin miners, which then that liquidity had became Bitcoin treasury companies and is now becoming Ethereum treasury companies. So it's hard to make the case for Riot at this particular moment as being or the miners. We could look at Mara in a second as well. Mara holds a lot of Bitcoin. Let's look at Mara. And let's also just try to see. I mean, closing back above the line, I would just do this. I would do a one touch off the top. That's the resistance that needs to be broken here I'll just leave it on the chart here. I won't remember when I come back to it, but for Mara to have a repair to regain that upward momentum. So it's not looking the best. Yeah, I don't. Even if you took so if you take this, you're stopped out, right? Line it up the old way. You'd be looking at this. Take this entry. You're in this trade. It's gone nowhere in relation to what since 2023. It doesn't seem the place that makes the most sense. If, from my view, from my opinion, I'm just offering my vantage point to you. Are we going to be at some point even if we go through bananas and Bitcoin breaks out of the sustainable channel. We see a cycle peak into October, November, and Ethereum, Solana joins the party. Even Cardano is able to make it up, past $1, headed towards 2. Are miners going to be pumping? Likely. Are they going to be able to put in like a 2021-esque pump? Likely not. And that's my opinion. I hope you use it as just a vantage point to help form your own, because I don't obviously have a crystal ball or anything like that, because that would just be way too smart. I'll go ahead and do that, Ace, as I leave as soon as we get off. Clean Spark's another good one for sure. And make sure that gets done. That's very, very smart, no doubt. We're gonna just leave it here today, y'all. I hope you enjoyed the session. If you watched this on the replay, crew, lots of love. Big shout out, everyone out there. Have a beautiful day, everyone. God bless you, and I'll see you all tomorrow.